Give us your reaction to what we heard this morning from Mr. Erdogan.
Well, look, obviously, somewhat unconventional just in terms of the rhetoric. But as you said, I think that this has been kind of in the air for a while. I think, we know where he's going with this. Look, at the bottom line from where, we sit is that what's going on in emerging markets broadly is really about the global synchronous recovery, continues to be. I know we got a little bit of weaker data out of China today on the consumer side of their economy vis-a-vis retail sales. But last week we got much better than expected data out of China on trade. Both imports and exports. And we think that that's really what powers EM. And our view is that over the next 2 to 3 years, this broadly EM continues to be a good place to invest.
You see, what's changed the game, or at least it feels like it is, we've started to see a bit of a dollar rally. We know we've got interest rates rising, and up to a month ago, people were going, look, it's fine, this is different, EM's different, it can be resilient or decouple from a tightening cycle from the United States. And now suddenly everyone's gone, well, the dollar could be a problem here. You think the dollar's really overvalued?
We don't. So we do think the dollar's overvalued. So we don't think that this little technical correction or technical rally that the dollar has had is quite frankly going to be sustained. As you know, we've gone through this period in 2014, 2015, where the dollar strongly appreciated, up by as much as 25%. We then kind of retraced through most of last year and the beginning of this year. And these currency markets always tend to overshoot. Our sense is that the United States is entering a period of very strong growing twin deficits, a deficit on the current account and a growing federal deficit. That combined with higher inflation is probably going to put downward pressure on the U.S. dollar. And the dollar was already on a purchasing power parity basis about 10 to 15% overvalued.
Wow.